As we wait to get started with the webinar, I want to share an interesting anecdote with you. I had the opportunity to participate in a presentation earlier today, and one of the speakers shared the number one principle of why financial institutions exist. We're basically the caretakers of money. We make sure that we help our consumer collect, consolidate, save money. We help them move the money around, transact with it. And the third aspect to that is we lend to them so they can live the life that they deserve. But the key thing is that they all trust us to make decisions in their best interest. And as you think about trust being such a key component, this gentleman shared a couple of anecdotal examples with the audience, and I'd like to share them both with you. We will start off our presentation right after that. I figured rather than having downtime, I could share this story with you. He talked about being an investor in an insurance company, and typically a relationship in an insurance company is with the consumer and the insurance company. And both people know that if so, for example, if the insurance company is not strict, the consumer will get whatever they want. And the consumer knows that if they don't inflate what they ask for, they're not going to get what is needed. So this guy set up a scheme where he said that whatever money we save at the end of the transaction, we'll go ahead and donate it to charity. And he had an interesting incident that took place, which was somebody filed a claim for a stolen laptop. And about a week later, he wrote an email back that said, I found my laptop. How do I send you the money back? This whole concept of trust is something that is vital. We'll talk about it as we talk about other things. Let's go ahead and start the webinar. Our focus today is Beyond 2020, People, Process, Technology. My name is Sandeep Kapoor. I'm an educator with Digital Credence, and I have many brands to thank on my journey here. I've had the opportunity to learn from apparel companies, financial institutions, entertainment companies, a lot of companies that essentially are all in the process of trying to figure out how do they serve the consumer of the future? What is it going to take to have that office of the future, the branch of the future, in terms of how best could you serve your consumer? The stories that I share with you today are based on actual experiences, a significant amount of research. And like I said in the beginning, many of you who have joined today's phone call should have a white paper to support today's presentation. If you do not have a copy of the white paper, simply send me a note at the end of the call and I'll make sure that I send that over to you. I want to share a personal story as to what prompted me to think about some of these things and also talk about the importance of a financial institution in a consumer's life. Meet my daughter. She just turned 23. And a few years ago, what happened is she got an internship. And as part of her internship, she had to share her personal financial information with an international software company. I was not comfortable with that. And I told her, I said, why don't you do something to mask all of that? So this young lady went ahead and opened an account with PayPal. She set up the account. She started getting paid via PayPal. Her second internship took her to Chicago. What we started doing was we would track her presence in Chicago from our home in South Carolina by watching where she was based on her mobile device, and of course, watching how she spent money. Same young lady now gets a job in New Jersey and she wants to pay her rent in New Jersey. I go to every single one of my financial institutions and I'm trying to figure out the best way for me to move money to her rental company. Every single one of my financial institutions failed in making sure that number one, I understood what needed to be done. Number two, getting the money easily over to her apartment complex. But the third part to me was the most troublesome. They didn't quite understand money movement themselves. And I think this is vital as we think about our future. What was also interesting is for all the financial savvy that my daughter has and has had, she always focused on not using credit, but she used PayPal, she used Venmo, she used digital debit card type transactions, which is why she never built up credit. And then finally, when she went out and she applied for a credit card from a company that's one of the top 5 credit card providers in the United States, the same company that approved me for a credit card many, many years ago now has a completely automated process where they fail to recognize exceptions and go back and try to serve my daughter. I share this with you because that consumer we serve uses us to move money, to transact, and we have to make sure that we are serving them effectively. But see, it is not just my daughter, it is people across generation. We are influenced so much by different types of technology, by fiction, by what is happening in other industries. Think about it. Our phones have the ability to listen to us and know what we are doing. Look at ads that you get. I was talking about going to a particular property and I'm served up an ad from that property. I'm sure each one of you knows the way from where you live to perhaps a destination that is 3 to 5 miles away. Yet so many times when we get into our vehicle, we are tempted to turn on the GPS, not because we do not know the directions, but because we want to make sure that if there's a problem, we will be given an alternative route. We are comfortable interacting with artificial intelligence where we are not talking to humans, and we sort of prefer that as a better, consistent answer as we do more. We do not mind sacrificing our privacy by letting our watch company or our mobile company have access to our health records so things are done extremely well. And of course, homes are becoming embedded with devices like Alexa, Google Home, our phone device. And what is happening here is as the device listens to us, they learn and they're able to serve us better. As financial institutions, we face an interesting challenge because that consumer, whether it is someone who is retired or it is that young Gen Z, every single one of them has a level of expectation from us, which is based on what is going on from a technology perspective, what is going on in other industries, and also what they expect from us from a regulatory perspective. Every one of these consumers, if you ask them what is it that they desire from a financial institution, it comes down to 3 things. Step one, they want intuitive convenience. They are in a hurry. Step two, they want incentives to drive transactions. And by incentives, I do not mean that we give them points for every transaction, but we simply come up with reminders that basically tell them what type of difference we have made in their life. What is it that we can do to serve them better? All of this is important because as we create that affinity, that bond with them, they now realize the value we bring to the table. And this is ultimately what drives success for financial institutions. The thing that they also take granted for, and they should, is the security of the transaction. It's the protection of data, your personal data, your business data, and this ultimately lays the foundation of everything that consumers want. And as financial institutions, these are our three drivers in terms of what we want to strive towards. As I go through what all is changing in different areas, I'm going to define different aspects of this change, and I'll summarize with some thoughts and ideas towards the end of this presentation as well. So think about it. Our branch strategy has to change. When people come to our branch, most of the transactions are about deposits, withdrawals. They're also coming to us, asking us to resolve a problem. And sometimes these consumers come to us for advice. And many times it's really not advice. It's them telling us or asking us to help them purchase a product that they cannot afford. It's a loan of some sort, or they've just received a big deposit. They want to start off a 401k, something to that effect in terms of what needs to be done. What we need to do as we think about the branch of the future is we need to train these consumers on how to transact using their digital devices. Most deposit operations, most withdrawals can be done on a mobile device. We've got to teach our consumers how to do that. We have to teach them how to move money. More and more people move money outside of checks as they pay. The challenge is, can we mentor our people to do all of that? And the key here again comes down to the branch being a headquarters of sorts for us, because these consumers come to our branch headquarters, they look at what we have, they appreciate the value proposition that we bring to the table. But at the end of every transactional visit that they pay to us, we've got to try to transform their experiences across channel. And you can only do that by training them, by getting them comfortable in terms of how to use these other channels. So if it is a loan application form, perhaps it is a deposit, why not take the opportunity to train the consumer within the branch in terms of what they need to do? And the branch of the future is not just a physical location, but it is a location that manages all screens that we have. Whether it's a mobile phone, whether we are connecting through our watch, whether we are connecting through a laptop, a device, all of that. The key to success is, what do we do to transform our branch strategy to turn it into a learning center so the consumer can indeed transact with us efficiently and effectively across channel. A key component of who we have in our branches are people. The people we have in our branch essentially need to be our best representatives. Typically, most organizations have about 30 to 40% of their staff is branch staff. We've got to figure out a way in terms of how can the people in the branch be good mentors. And for them to be good mentors, number one, they need to understand the products and services which are the solutions we offer as a financial institution. Now, I'm not saying that a teller needs to become a wealth management expert, but at the very minimum, why couldn't a teller have sat through a presentation from someone who provides wealth management services so they can develop a 2 or 3 line succinct value proposition that they can provide back to the consumer so they can serve that consumer effectively? The people in the branch are also the ambassadors of technology. They've got to know what we have, how it works, and they should be able to resolve it. Over the past 2 years, I have found more and more financial institutions actually turning up the heat on the employees that work there to make sure that they enforce learning on technology products that are offered by the financial institution. In fact, I would take it one step further and even suggest to you that why not consider turning digital into a product that can be sold by your employees to the consumer that they serve. Of course, people come in to a branch or to our contact center to talk to us, which means we have to listen versus just talking to them about that flavor of the day, because otherwise they could go to an ATM or they could transact online on their own. Our strategy should be around being mindful, listening to them, interacting with them to uncover what they need, suggest to them products and services, and then transact. Confirm that with them. See if that's exactly what they needed so we can indeed take the right next steps further. The branch of the future or the bank or credit union of the future cannot be complete by making sure, unless you make sure that you have actually created financial counselors who are thinking about the consumer's best interest. And that is key as you take things further. And if you think about it, think about consumer psychology. How do you take care of people? How do you nurture the bird in hand? Your approach as far as training and communication and even perhaps marketing in your brochures should be, number one, shame on me if you didn't know that my financial institution offered a product or a service. The second one is, have I lowered the anxiety enough for you to feel comfortable enough to ask me a question? Or have I intimidated you? Or are you embarrassed to come to me for a situation like that? And the third aspect is, am I giving you 100% attention? Or am I being distracted by technology, by conversations, or what I think is in your best interest? Because remember, people buy for three reasons. People buy because they have a need, or they might do it because they find it valuable. You've given them a good rate, which is why they've come to you. And the third aspect is aspiration. This is something that is important to them. They want to dream, and different people's aspirations are different. For someone who's just out of college and getting a job and moving to another city, getting an apartment of their own, getting a car for which you provide them with a loan, that is aspirational. It's also a necessity. But again, on the other side of it, you've got people who perhaps invest in an RV or they invest in a second or third home. That could be aspirational. And we have to not judge our consumers as we talk about that. The third aspect is your relationship with that consumer. Why did they choose you? For starters, they'll only do business with you if you provide them the functionality that they need. The second most important reason is you gave them a good price. The third aspect is relationships. And the key here to keep in mind is you have to keep nurturing that relationship, because if you do not onboard, if you do not build a relationship with your consumer, they will never tell you that your product is priced too high or that your product has stopped working. And this is what you need to think about as you train your different people. The third key thing for us to think about here is it's mobile. During the course of the discussion so far, I have looked at my mobile phone a few times, primarily for time to make sure that I am on schedule, But yes, I cheated a little bit to look at who texted me. We carry this device with us at all times. What we have to do is keep in mind the same aspect of how would we like to be treated. And my rule of thumb for this device, which is not just a communication device, it is a device that connects us to the web. It is a device that takes us from point A to point B. It's a transactional instrument. We can get entertained on it. It does so much for us. Three rules. Number one, I want to grab your attention if it is urgent. Second aspect is it's important. And the third one is it's useful. Useful, useful can wait for something that is important, and important can wait for something that is urgent. You have to be careful as you think about your strategy is what am I doing to tell the consumer I'm serving that I have an urgent message for you? If you don't, every message, if every message was to become urgent, we sort of become like the boy who cried wolf. And what ends up happening then is that that consumer starts ignoring the messages that we send out to them. We disassociate with them and we lose the value of how we could and should be communicating with that consumer. The whole era of biometrics is giving consumers remarkable convenience. I'd like to talk about this slide from a few different perspectives to give you ideas as you explore your own strategy. Think about it. How hard is it for someone to break in and figure out what someone's mother's maiden name is? Or answers to those secure questions that are called out of wallet questions. Passwords and 4-digit pins are certainly things that can be hacked. And if you think about quantum computing, which is going to come up in the future, what we need to be careful about is how do we make sure that we ensure integrity because we have the right information. Biometrics is convenient. My phone recognizes me because of my touch. Perhaps my phone can recognize me if it sees me. Can these devices not be connected? You see things like Clear, which are used by TSA at airports for security. They're actually being used by airlines and by rental car companies to expedite that check-in and check-out process. I'm convinced it is you because I've seen you. I've used facial recognition to recognize you. I've done a retinal scan. I've got your touch. I can see the way you walk, recognize your gait. It's your voice. I can decipher it. All of this is important as you think about things. But keep three things in mind as you think about your security and convenience strategy. It's precisely that. You got to be secure, but you also have to provide convenience, which means I use this to authenticate who you are. Second, I do this for internal efficiency, which means I have the ability to record the transaction. I know what happened. I list what happened. I don't have to write it down because I have digital proof that you were there. The third aspect here is why not use this to recognize your consumer so you can serve them well by anticipating their next transaction. And with this, I'm going to share with you my pet peeve that I have with every single financial institution that I do work with. You see, every time I use their ATMs, they always ask me to choose my language and what I want. Why can't you know that I speak English and I always take out $60? That's the part of authentication. Anticipate, the consumer will appreciate the transaction, And you need to start thinking about this for every possible journey. Think about the idea of how people transact. People basically get a paycheck, and if you look generally on how people spend their money, people spend about 50% of their income on essentials. We would like them in an ideal stage to save 20% of their income. And of course, there's lifestyle choices that drive the other things that need to take place. What we've got to do is we've got to be sure in terms of how we talk to our people. Do we understand how they use money? Do we know what stage of life they are in? What type of advice could we be giving these people? How do we make it better, more effective for them so they can do more with us? And this is where we've got to really understand them, their budgets, what advice we can give them, and what we can do for them in their best interest. We also have to digitally automate a lot of what needs to be done. People save and store their money with us so they can move their money. They can make bill payments. They can do cash transactions. They can write a check. It's an ACH transfer. It's debit cards, credit cards. It's P2P. What we have to do is we've got to start thinking of how do we make it, number one, easy. Number two, how do we make it consistent? How do we make it secure? But what is really important is why can we not train our own people to identify and recognize how money moves so they can articulate this message back to that consumer who's seeking advice? When I started this conversation, I told you about the fiasco that I had with every one of 5 financial institutions in my attempt to transfer money to my daughter's account to make sure that I paid money for her rent as she started things off. The part that bothered me the most was that every single one of the financial representatives that I spoke to did not know how money moves. So I'll give you homework as I go through today's discussion, and I'd like you to think about how your financial institution facilitates the movement of money. Do you offer P2P? Do you offer account to account, A to A? What type of bill payment do you offer your consumers? What is the adoption of all of that? Think about all of this and imagine yourself in a role where you're sitting in front of one of your consumers and your consumer asks you, hey, what are my options for either me as an individual or as a business to move money? Can you write out all those options, number one? And number two, can you explain it to that consumer in simple English? Put this together. There's multiple projects where people are calling these payment hub projects. We're trying to create this payments hub, money movement hub. It starts with education, explaining what you have. And when you understand what you have, you're soon going to find out challenges and problems, which is where you now step in and you start thinking about strategies to get your consumer to perhaps use their debit card or credit card to make payments when they can, because you earn interchange, things along those lines. Again, this is important, but it's part of the strategy that you need to define as you take things further. The next big aspect I want to address is everything that is taking place around the world of data. You see, if you compare us with retailers or sporting good companies or those entertainment companies that I showed you in the beginning, The one thing financial institutions have a lot of is data. And unfortunately, for many reasons, but not just regulatory, it's how do we use the data? We probably don't know how to collect the data efficiently, and we're not using it in the best possible manner. So think of your data. If you know me, you can serve me, but make sure that you've got plans on how do I collect data from multiple channels and how do I get the data back to that channel. If I give you the example that, if I bring up the example that I just had on how a ATM can be empowered by knowing that I speak English, I always take out $60, and I do not care about the receipt. I'd rather you email me a digital receipt or send it to me via an app. Wouldn't that be value in every transaction? We have to make sure that if a consumer is sitting in front of us, it doesn't take us 15 minutes to figure out what brought them there and what we need to do to offer them the next best conversation or the next best product. There have been many projects that are now taking place in the world of data, and a lot of people are investing in data projects. I'd like to speak about it from 5 steps that I suggest for consumers. Step 1, as you think about your data strategy, it's about collection of data, making sure that you take the data and you collect it, or you at least know where the data is so you can transact with that data effectively. The second part to it is we've got to validate the data to make sure that the data is indeed correct. It is cleaned up. It has the right information. And the process of collection and validation is not a static process, because once I have built this process, I want to make sure that I have your right contact information. I need to get a hold of you with important, urgent information. How do I get a hold of you? How do I reach out to you? I have to make sure that I have all of that. The third part to it is data visualization, where we are trying to visualize and see all those reports, all the possibilities, all the scenarios that we have for that particular consumer or business. Many times, financial institutions focus on the first 3 steps only. And the other mistake we tend to make is step 1 and step 2, the collection and validation, are done as static steps without getting proper updates. What we then do is we visualize the data. And sometimes what we have visualized or the reports that we have, they're really not actionable. I've had 2 opportunities with 2 separate financial institutions in the last month to look at their visualization tools. And both the financial institutions ran a couple of interesting queries for me. One of them ran a query as to who they feel is going to churn or drop off from the financial institution. They put in all kinds of factors into their model. They put reduction in usage, deposit not coming through, a variety of factors. It could be even the payment of the loan, the last loan is 3 months away. So I could predict that if you are not a direct client of mine, I might be losing you. But what this financial institution did not build is they did not build a strategy in terms of what needs to be done. Or along the same lines, I have a new consumer, someone who just became a member of my organization. How do I stay in touch with him? What next conversation should I have? We need to start thinking about those. For that, I'd like to highlight 4 and 5, which is we start with predictive analytics. Can I use the data to predict what might happen next? And then can I be prescriptive with it? Another mistake we typically tend to make is we run data warehousing as this massive project where we do this collection and validation of all the data, and it takes a lot of effort, it takes a lot of time. But then the challenge we run into is, okay, what do we do next? How do we do it better? The ideal way to run a data and analytics project is to pull together a few people from the business side, to pull together people from technology, and think about running an analytics workshop there to prioritize and see what data you have, what you could do, and prioritize it based on results that you expect. Is it going to make you money? Is it going to cut cost? Is it going to improve engagement? Is it something you need to do to become internally efficient? Or is it something that is required from a compliance perspective? Run that score, take it further, and this is how you add value. I am going to do a follow-up discussion on data and analytics. This particular call will be done in November. I'll let you know about when that webinar takes place. But in the interim, I'll move on from this slide to talk about another big thing that a lot of people talk about, which is this concept of artificial intelligence. The idea of banking a billion. The theme behind this really comes down to what can I do to do things consistently to make sure that I'm serving people without bias. You see, it starts with data. It starts with transactions that can be automated. Hence the word robotic process automation. Think of your ATM as probably one of the simplest RPA tools that's out there. The concept of fast cash. Why can I not log in to my ATM and then simply say, I want $100, $20, $50, whatever it is, and let the machine dispense that? Over time, machines learn your behavior and they start giving you options based on that. Deep learning is the application of models to make suggestions, to make predictions, and ultimately artificial intelligence is prescriptive. It's a step-by-step process, but it starts with data. By having access to data, by having access to clean data, but also what is vital and important is you have to make sure that you have a business focused discussion on what it is you can do with this data. I've also seen the application of a lot of AI based chatbots, etc., that are being deployed at different financial institutions. Again, there's things that are good and there's things that are average, but how you take this step by step is what's important. You can do a lot with this information. We've got to be careful in terms of how we use this data. I wanted to share with you in terms of what's important out here. The next thing I want to talk about is we're trying to be 24/7, and omni-channel today is becoming a table stakes game. Everybody is expecting that. Think about consumer journeys. What is it that we should be doing and could be doing for the consumers that we serve? We give them checking accounts, deposit accounts, debit cards, credit cards. We can help them with retirement, wealth management, problem resolution, insurance, things along those lines. Perhaps a loan for a vehicle. We can help them get into a home, and we might be helping them with their business. Think about some of the other things that we can do digitally as well, which is we let people know about our financial institutions' impact in the community. We put out relevant alerts and notifications so they know what's going on. We're talking to people about human resources. We're talking about jobs, roles, who did what. We want to highlight that. We also want to use this as an internal messaging engine that shares ideas and best practices and perhaps important notifications within the organization. And we want to be that organization that provides exceptional content. And think about this. There is a reason, there is a season, there is a lifetime in terms of why people interact with us. Why not keep our data content strategy as a perpetual strategy? Because we're always going to have people who want to know how to buy a car, how much they should take out on a loan, what is the best way to use a credit card, how to move money from point A to point B. Think about content, think about creating content, keep a strategy focused on making this available and making this available effectively. You hear a lot about the term called journey mapping. Basically, every single one of these 10 buckets are journey mapping buckets. I plan doing a webinar on effective journey mapping very soon. If you'd like to be a part of that, again, let me know and I'll make sure that you get an invite. The one caution I'll tell you about journey mapping is when you do your journey mapping, don't make it a complicated process. It's simple. You want to keep it simple enough so you can capture what needs to be done, not how it is done, because there you mask some of the complexity. But the key aspect to keep in mind as far as journey mapping is concerned is do it yourself. Do not outsource journey mapping to a third party. You can be trained on how to do it effectively because it is a journey without a destination, because you keep improving and you'll find your journeys keep getting better and better over time. Since we're talking about digital and defining digital, I'd like to share three things: digital etiquette, digital maturity, and I'll give you an anecdote for defining your digital strategy. So think of this: if you were a digital persona, wouldn't you want to be considered to be someone who's empathetic, someone who's considerate? They're friendly. You're also relevant. You speak to people in a personalized one-to-one way. You keep it interesting. You make it engaging through storytelling. You're also knowledgeable. You're wise. And because you're knowledgeable, you're authoritative and convincing. You've got to do that as a brand. Also, in a 24/7 digital world, you are responsive. You got to do things quickly. You got to respond back in a timely manner. And you are reliable. When you say you'll get back to the consumer in a certain amount of time, you should and you would. You will. You've got to make sure that how you speak is polite. Sometimes the person on the other end is not as polite. What you say is acceptable, and even if your answer is not good or what they want to hear, you're honorable in how you put this out. This slide by itself could have been an entire 2-hour workshop in terms of what you need to do and think about. But please use this as fuel for your digital team to think about your digital strategy. Now, let's talk about measuring the maturity of your digital program. I do it in 3 parts. Number 1, it is for me to stay in touch with people. I'm doing an okay job. Number 2, I'm using digital to solve problems and answer questions. I'm doing a little better. Third is, can I use digital to find and sustain new business? Many endeavors are afoot to essentially create the office of a chief digital officer. We've got to do that effectively and correctly so we can drive value. But I want to uncomplicate all of this digital stuff and share a very simple anecdote with you. You see, I enjoy feeding birds in my backyard. And as I put up my bird feeder, birds come. If I throw seed at the birds, I scare the birds. Keep this strategy in mind. If you keep your feeder full of good seed and it's clean, that is content that attracts birds. And by you throwing seed at the birds, they're less likely to come. They typically get scared. The birds come when other birds tell them that there is food at the feeder. We've got to think of our long-term strategy in terms of making sure we have the right content, we are approachable, and we are leveraging word of mouth to try to grow more and more. Well, that is your strategy in a nutshell. Our goal eventually is to deliver personalized, connected experiences. And if you think about the channels we have people channels that offer assisted services. The contact center and the branch are where we want to make sure that whatever we explain to the employee that works there is 100% correct, and it's easy for them to find the information to serve the consumer effectively. That's what we need to do for these assisted service channels. For these anytime self-service channels like the ATM, the kiosk, the IVR, which is of two types. We've got the traditional IVR and we've got these modern chatbot-based IVRs as well. Our strategy is around how do we offer anytime self-service? How do we make sure that we are indeed putting simplicity, convenience, and interactivity in terms of what needs to be done? Are we keeping it easy and simple for them? And then, of course, we've got this concept of anytime, anywhere self-service. It is for the empowered consumer who's on the go, which is this whole idea of building better user experiences. Now, I know many of us have this job of it, basically, I see a lot of us have this job of the chief experience officer. How do we make sure that the chief experience officer builds a better experience? So we talk about making it more convenient, making it intuitive. And I've seen many people talk about that, but I really want to step back and ask, what is it that makes it convenient? What is it that makes it faster? What is it that makes it safer? Start thinking about comparable brands within our industry and outside our industry so they can indeed, we can build something for those people to try to do more. Our entire strategy is and should be around how much data we have and how well can we serve our consumer across those many different channels. I'd like you to step and also think about what we talked about earlier, the importance of mobile, and really think of mobile as the perfect banking experience. I've had the opportunity to speak in many parts of the world. Some of them are developing and some are developed. In many of the developing parts of the world, the one who leads as a transactional instrument is the one that wins everyday banking transactions. People come to the person that gives them a wallet to transact. And I know I said this about the developing world, but think about my daughter's example from the beginning of this presentation. Her relationship started with fintech because fintech gave her a place to collect money and a way to transact. And now she depends on fintech before she goes, in her words, an alternative financial institution is a traditional financial institution. And whatever arguments I had with my daughter about the sanctity of a traditional financial institution basically went away when she realized the frustration of how hard it was for us to send money from one point to the other. There's a long story to what actually happened and how many U-turns and fiascos we went through. When I do talk about payments in the future, I'll share that with you as well. But what do we expect from the perfect banking instrument? The experience has to be intuitive. We also need to realize that we need universal connectivity and APIs. I mean, think about this. If I have to make a payment to my utility company, it is such a painful job to go through bill payment and set them up as someone who gets paid, etc. Yet, if I want to do Uber or if I want to do Lyft, all I do is I download the app and it's an open API connection that facilitates transactions. The future of financial services lies in universal connectivity and APIs to drive that change. And of course, when the number of transactions go up, you have things like fraud, cost, analytics, analytics back to the consumer. All of this is going to get affected. How do we take care of that? We have to think about scale. The best way to compete with fintech is basically around the concept of, can I scale and can I do more to serve that consumer better? Can I take what I have and keep improving it? Most digital brands are there because they keep enhancing and adding. You remember you had to like someone on Facebook to say something bad about that brand or that person? Facebook changed that to where they have multiple things that you can say. You can express sentiment. Digital brands make changes all the time. So our consumers look at us and say, why can you not offer me easier and better flexibility? And of course, can we not use this as an omni-channel wallet, which means it works across channels, across devices? In fact, think about this. What could we potentially do to enable transactions that are driven from mobile devices at different physical touch points that we have? They say this, he who can deliver the most reliable, most flexible, and easiest to use payments technology will eventually be the winner in the battle for consumer accounts, be that fintech, traditional financial institutions, or some entity that won't exist for another 2 years. I'm pulling this quote from a white paper I did about 2.5 years ago. And I thank the gentleman that gave me this quote, because let me tell you what the perfect experience is. And I know after I tell you who this is, many of you have tried this. I gauged a brand for how easy their application process was. They gave me a deal that was free, no fees. They gave me a rate quickly and gave me a limit to what I could spend. They have phenomenal rewards. The user interface was easy. It was extremely safe. The design of the card is actually something that would put Amex to shame. The activation of the card, straightforward. Customer service, absolutely outstanding. I think you know who I'm talking about. I'm talking about Apple. Apple talked about this a while back. They said they were launching, they were about to launch. Now they've launched and they've given us that experience. What are we doing to do more to try to correct it, to compete in order to do better? We've got to think about that. Think about the idea of building that transactional instrument that is perfect. Can we lead with payments? Can we lead with money movement? Can we start with the card, with what happened with my daughter, and through that solicit deposits and eventually solicit loans in order to do more and more? This slide, the previous slide, and the next 3 slides are actually very deliberate homework that I'm giving for you, to you, because on the 16th of October, at the same time, it's a Wednesday, I plan hosting a webinar on how you could and should define your payment/money movement strategy. A lot of people say payments are strategic. It's the top of the golden triangle. But I want to give you part of this as homework so you can prepare. And I've got some questions that you will see in a couple of slides as well. I also would like you to think about one thing, which is think about what we all want, but don't just think about the consumer or the business that transacts with you. Don't just think about you as the issuer. Also think about the merchant where the consumer transacts. They all want ease, speed, and convenience. Nobody wants fraud, and they want to maximize earnings or incentives. And it's got to be a win-win situation for everybody that's involved. Your strategy around payments, money movement, and affinity should be, if you pop up all the time and you're easy, you become top of mind and you nurture your way to becoming that preferred financial instrument. And so here is the core part of your homework. You may or may not be directly involved in your brand's payment strategy. But if you could pull these numbers together, I know on the 16th of October, we'll have a very productive conversation. Think about the number of cards you have, the percentage of active cards. Define what is active for me. Think in terms of the total number of transactions per card. Think about how many times you tell me that you deny a transaction to me when it's actually me. What is your false positive ratio? Think about how many of your consumers, customers, or members have actually allowed the consumer to embed the card into the merchant. Think about bill payment, fraud, what type of reporting that you have access to. How do you get information, access to information, and what marketing programs you have in place, and what are they doing to drive revenue? There is no way I can be out with every single one of you and help you define this strategy. So I decided, I said, why don't I brainstorm? I've had the opportunity to talk to a lot of people, and let's dedicate perhaps an hour, maybe I'll ask for 90 minutes on the 16th of October. And we'll try to put this as a plan on how we put together a strategy. Think about your financial institution and how you measure success. Number one, are we convenient? Are people satisfied? And does the satisfaction just come in satisfaction scores, or does it also translate to referrals and products? Do we have growth and revenue? What about digital adoption and digital usage? Do people actually transact with you? Do they have your cards? Do they use you? Do you have more products per consumer year over year, month over month? Are you keeping consumers or are you losing consumers? Are you internally efficient? And are you building trust as you do more? As we talk about people, process, and technology, think about the long-term value proposition. We need to develop our people into empathetic and knowledgeable financial counselors. How are we doing that? We need to think about process. Can we reduce the amount of transactions? Can we offer ease and convenience? And are we leveraging things like biometrics, data, AI to drive efficiency and effectiveness? One of the things that I am trying my best to do is through these webinars, share a lot. So when you think about your strategic planning or thinking about putting a strategy together, you have a plan in terms of how it's done. There were a few questions that popped up at the beginning of this webinar. Number one, this webinar is available for everybody. It will be recorded and email will go out. Our next webinar is on the 16th of October. You're absolutely welcome to join that. Remember, that's the one on payments. And then the whole idea of, if you'd like a copy of that white paper, simply email me here. And of course, if you'd like a copy of a strategic planning guide that I'm finalizing, I can send that to you as well, with one caveat. I'd like you to give me feedback on it so I can try to make it better for all of us. My strategic planning guide is based on something very simple. Number one, is the consumer engaged? Number two, how well can you serve the consumer across channel? And what is the ROI and the lifetime value of this relationship? I thank you all for joining me this afternoon. Do connect with me on LinkedIn and do share your feedback. Until next time, I wish you all the very best. Thank you.